Hey everyone, my name is Fabio, and in today's video we're going to be going over a concept which many traders still find hard to understand, and that is the basics behind market structure and trading market structure with a clear and easy framework. So when it comes to market structure, pretty much everybody is familiar with the basic theory, and that is obviously an uptrend over here on our left, which is something that consists of higher highs, also known as HH, and higher lows. The aim of the game is in an uptrend, obviously, to trade the continuation in towards the highs, because we expect every single time a new higher low to be formed. When we trade market structure, all you want to be doing is going long every single time on that specific higher low, because we expect that a new higher high will be formed. Go long from the higher low all the way in towards the higher high. After a break of structure, also known as a BOS, and a break of structure actually stands for a break in swing structure, you expect a pullback. So this is very important to understand when setting targets in market structure, because what you want to be doing is you want to be entering the market on the higher low, but as soon as that break of structure has taken place, you'll be expecting a pullback in towards the downside. So to gain a optimal amount of profit, what you want to be doing is entering the higher low and then getting out pretty much exactly on the time of a higher high. And how do we know when a higher high is formed? We pretty much recognize that a higher high is formed once we reach an area of supply, or when we see a shift in the overall market structure on the lower time frame. So write that down. Either when we enter supply, or if we see a shift in the overall market structure on the lower time frame, that is when we can expect a potential pullback to come towards a new potential higher low from where we want to go long again in towards the highs. Now, when do we know when a higher low is formed in an uptrend? That is once we enter an area of demand, or when we see a shift in the overall market structure on the lower time frame. So pretty much exactly the same way on how we anticipate that a higher high has been formed. That's the same what we do for when a higher low is formed. So this is the basic theory. I understand it seems very, very easy, but in practice and in reality, it's a lot harder, because what you'll see is that we have all these mini trends forming on the lower time frame. So what you'll see a lot of people doing is that mark out structure over here. So let's say, we have a downtrend in towards the downside. So this is my area of supply, and I want to be shorting every single time because I expect that the trend will continue in towards the downside, right? So what they'll do is that they'll go short over here with their stop loss above that area of supply or above the high over here, and then target the lows. And then what happens is that they get stopped out, and they'll be asking themselves the question, well, why did I get stopped out? That is because swing structure is always key. So you want to be focusing on trading in between the swings in price, meaning you want to focus on trading from this higher low in towards this higher high. So what you want to be doing is you want to be buying over here when we see a pullback in towards the downside and a trend shift, which is in line with the overall swing structure. So over here, we have a bullish market structure, obviously from this higher low in towards this higher high. Price pushes in towards the downside, sees a bullish trend shift over here, meaning that the overall swing structure is now bullish, but also the lower time frame internal structure is also bullish. So your internal structure is also bullish. And that is when you have the optimal confluence to take that long in towards the upside. So make sure that you're not trading against the overall internal structure of that swing structure. Okay, so it seems maybe a little bit complicated, but we'll get to this on the real life charts very, very soon. Now moving on in towards trend shifts and the basic theory behind them. So obviously, like we just explained, we always expect for trend to continue in towards the highs until the overall order flow has shifted. So we can see over here, every single time we form a new higher low, until the higher low is broken, we see a break of structure, and we form a lower low. That is when the overall market and order flow shifts, and we then know, we're now bearish, and we expect the trend to continue with new lower highs and new lower lows to be formed. Now, in reality, again, it will look very different than to the image over here, because in reality, what you'll see is all these mini lower time frame trends form in the overall market. So again, when going long, what you want to be doing is, for example, from this higher low, when we have, let's say, this bullish trend, which we had over here in towards the highs, we get that pullback. Again, trade in line with the overall internal trend. Now, once we see that BOS here in towards the downside, we form that new lower low. People again will think, this is the uptrend. So they want to be trading this area of demand over here. They want to go long from here because they say, okay, we had a BOS over here, we had a BOS over here, so we're bullish. However, again, don't get caught up in that internal structure because the overall swing structure from this high in towards this low is bearish, and the optimal trade will come once you get the real internal trend shift over here. You get a pullback in towards supply, and the internal trend aligns with that overall swing trend in towards the downside. So that is the overall focus of the game. And that is pretty much the basic theory behind market structure and how we want to trade it. So now let's dive into the real-time charts, and I'll see you over there. Welcome back, traders, to part 2 of this video. So now what we're going to be doing is we're going to be going over the theory, but then in practice. So over here, what I'm going to be marking out is our swing structure. So over here, we had our 4-hour BOS in towards the downside. So it started here with an impulse down, lower low, lower high, and then a newer lower low was formed. So obviously what we're going to be looking for is a pullback once this low is formed, because the overall swing structure is bearish, right? So the swing structure is bearish from this high in towards this low. So we know from theory that we're always going to be looking for clean market structure like this, because obviously in a downtrend we expect every single time a lower low to be formed. So this should be our lower low, this should be our lower low, and now we're looking for a new lower low potentially to be formed. But in practice, what actually happens is that when we see that downtrend happen, is that the internal structure facilitating the pullback could be bullish. And what a lot of traders then do is that they say, aha, we have a break of structure, we have a break of structure, so the market is bullish and we should continue in towards the highs. But that is where a lot of people go wrong, and that's what I'm going to be showing you in this exact example. Because the overall swing structure is bearish from here in towards here. Once we get that internal break, so we break this high, so over here, this is not a swing pullback, this is just internal structure at play. We start getting that pullback in towards the highs. We then get that pullback here, then a new push. So again, break of structure, pullback, and then a push. So again, a break of structure, pullback, and then a push. So again, a break of structure. But then what a lot of traders will be doing is that they'll be saying, okay, the market is in an uptrend, right? In towards the highs. So every single time we're forming a high and then a higher high, a higher high, a higher high. But this is just simply the internal trend at work before the swing structure. Ultimately, we expect that to prevail and to push price further in towards the downside. So now what you see is that people will keep on longing. They'll say, okay, here I have my area of support and resistance. Here I had my Fibonacci retracement tool. And on this bullish candle over here, that is when I want to go long and form a new potential higher high at, let's say, the minus 27 fib. But then what happens is that the market reverses on them in towards the downside and they're surprised. Well, we are not surprised because we know that the overall swing structure all the time was simply just bearish in towards the downside. And this over here was just simply that internal trend facilitating the pullback before that downside continuation. So this is a perfect example of how we utilize swing structure and internal structure next to each other. So simply the internal structure is the market structure that facilitates the pullback before we expect that further downside continuation to occur. All right, guys, so welcome back to our second example here on Aussie dollar 4-hour chart. So again, what we can do is mark out the overall swing structure from this high over here. We had a break of structure on the 4-hour. So now after breaking this 4-hour high, what did we see? We saw a pullback form in towards the downside, meaning that at that time, this was our swing high. And over here inside the lows, we have our swing low. So this over here is our higher low, and this over here is our higher high. So ultimately, again, what do we expect in a perfect world? In an uptrend, we just expect clean pullbacks and clean impulses in towards the highs. However, again, in reality, what you will see is this uptrend in towards the high consists of lower time frame uptrends, and on the pullback, instead of a clean impulse, you'll see this smaller lower time frame trend as well. So just showcasing what that looks like. Again, over here, we get that instead of, let's say, this clean, just straight line impulse in towards the highs, we get the push up, the pullback, the push up, the pullback, the push up, the pullback, push up, pullback. And in towards the downside, we get the push down, the pullback, the push down, the pullback, the push down, and then a pullback, and then exactly maybe one more push down before then, for example, a break of structure internally, and then further upside continuation. Now, if we press play, what you'll see in this particular situation is that we get that pullback in towards the highs, right? So what most traders will be doing, again, is if we just focus on the overall internal trend, we get this break of structure, we get this break of structure. So what are people expecting at this point in time? Well, they're expecting the overall trend to continue in towards the downside. However, what do we know? We know that the overall swing structure is still bullish, but that this internal trend is just facilitating an overall pullback before that further upside continuation once again. So now what do we see happening? If we just focus on price action over here, what a lot of traders would do is that they'll say, okay, this is the fib over here that I've drawn. This over here is my supply zone, and that is where I want to go short from. So what happens once you press plays? Okay, we see indeed some downside continuation, but ultimately, if you're looking to swing price all the way in towards the downside, towards, let's say, the minus 27 fib, and in towards a new lower low over here, because you expect this to be a lower low, and we expect a new lower low to be made over here, that doesn't happen because, again, you're trading against the overall swing structure in towards the highs. This internal trend here is just simply facilitating a pullback before potentially seeing that further upside continuation. And I kind of mentioned it at the beginning of this video. The way to recognize that that higher low has now been input in towards the market over here is by coming in towards an area of demand and seeing that lower time frame trend shift. So what happens? We come in towards this area of demand, we press play, and then indeed we get that trend shift, and you see the market continue in towards the upside. So instead of the shorts playing out from this area of supply in towards the downside, the overall higher time frame swing trend prevails, and we see the market rally in towards the highs. Now, I hope you guys enjoyed episode 1 of the TTA 2024 course. Much more coming. Make sure to join the Discord server, link in the description down below. Don't forget to leave a like and a comment, and I'll see you in the next video. Thanks.